RBI Governor Shaktikanta has announced that UPI can be linked with credit cards going forward. This, of course, will have to be executed and rolled out by the UPI maker NPCI. But what does this mean? Can this be the next big trigger for UPI, which anyway, month after month, has been shattering records? What is this going to mean for financial inclusion? Can it lead to, let's say, higher value UPI transactions? What's it going to mean for consumers, merchants? Can this be the first building block for credit on UPI as well? That and more, I'm going to be talking about Nikhil Kumar, the co-founder of Setu. He and his co-founder Sahil, long back, were actually locked in a room by Nandan Nilekani, saying, you both need to figure out what you're both going to do, but I can see both of you working together, and then came across Setu. The two of them are experts on fintech. They write a lot about it, have been involved with Aadhaar as well as account aggregators. Nikhil, welcome to Startup Central and ET Now. Good to have you back on the show. Opening comments. RBI saying credit cards will be linked with UPI. How important is this? Can it be a game changer?
Hi, Nayantara. Such a pleasure to be back, as always. Thank you so much for having me. I think, I think this does, as I was saying, earlier, this is a new beginning for UPI, because so far, as users, we associate UPI with our bank accounts. When we have money in our bank accounts, we use UPI to transfer money to a person or to a merchant. I think, this is a paradigm shift of allowing different types of instruments. Although I have to call out that this is not the first such initiative by the RBI. If you remember, a couple of years ago, RBI did come up with a regulation for wallets to be interoperable with UPI, and they had actually issued guidelines. And I think, the credit story is basically a follow-up to that. The most interesting thing about this is that UPI as a protocol, as infrastructure, actually allows for all of this innovation to happen. And I think, as consumers, there is a big shift of moving away from cards to mobile. When we think about UPI, it basically brought in a lot of users who used to use debit cards to access money from their bank account and move them to mobile payments by using apps like PhonePe and Google Pay and so on. And I think, in our minds today, credit is still, is kind of linked very tightly and coupled with credit card. And I think in the coming decade, credit will become a mobile first product. And, the most exciting thing about, this announcement is not about what is going to happen to cards that have already been issued, but the new credit products that will be built in the next 5 to 10 years.
I'm going to get into all of that in just a bit. But first up, UPI has also been used for smaller value transactions. Even if you were to talk to the folks at NPCI, that's what they say. It's popular for the smaller value transactions. But whenever it is that credit cards would be linked, beginning with RuPay and later on maybe with Visa, MasterCard, etc., do you think it can trigger higher value transactions just because credit cards will be linked, users might feel it's safer, and just because of their habits?
I do. It's not that today high value transactions don't happen on UPI. For example, there are platforms and companies like Cred, which are innovating on, UPI, where they allow you to pay your credit card bill back via UPI, right? So, if you generally on an average, I think we can assume that, a consumer's bill on a credit card is somewhere between 20,000 to 50, 60,000 or 1 lakh rupees in a month. And UPI actually enables such high value transactions to happen. Or, if you're paying school fees or if you're making stock payments and so on and so forth. It's just that the volume of transactions are much more low value in nature because they mimic, your cash-based transactions. I think the biggest pull for credit card users to do transactions via something like UPI will most likely be the convenience that it will offer. The fact that you may not need to necessarily carry your wallet anymore Probably the reason you carry your wallet today is probably to hold your cards and maybe some cash. But having everything in a single place, having your debit instrument and credit instrument on your mobile is probably going to be the biggest pull from a consumer's perspective.
Now, we all know that the number of POS machines, terminals that are out there are almost a fraction of the QR codes. You can go to your Panwadi now, you can go to your Chai Ka Dukaan, you can go, and they all have QR codes. They don't have a POS machine. Will that come into play at all, or it doesn't matter then whether it is debit cards or credit cards?
Yeah, I think a very interesting lens of looking at this announcement of credit card on UPI is how will this change merchant behavior? One of the things that we saw in India, if you remember 5-6 years ago, all things of digital was really fight against cash. UPI became ubiquitous and everybody started using it because there was no barrier for entry for any small merchant. They didn't have to think twice because they didn't have to pay any fee to collect payments via UPI. So one of the interesting things that we will have to watch out for is how will merchant behavior change by allowing credit to come on UPI. Traditionally, what we have seen is that the cost of terminals have gone down significantly over the years. It's a bit like mobile phones or smartphones, right? So, the cost of these devices has gone down. However, there are only a certain segment of businesses which actually can afford to accept credit as in an instrument. For example, consumer durables, where the margin of a sale is maybe somewhere between 15 to 20%. For that person to pay that 1 or 2% of MDR on credit card is acceptable because they have enough margin structure laid in. Whereas or you can think about probably restaurants. When you actually go for a meal, restaurants may have 20, 30 or 40% margin on the food that they sell, or beverages, or liquor, and so on and so forth, where the margin is much higher. Those guys can afford to pay that 1 to 2% of MDR. Whereas if you look at your local kirana shop, the person that you buy your vegetables from, they operate on razor thin margins. They operate on margins like sometimes as low as 0.5% or 1% or even 2%. So for them, they can't technically afford to accept credit as a payment instrument in the current business model of how credit cards work. So my sense is, UPI and credit will become another payment method for those merchants who have already accepting credit cards as a payment method. Now, and the consumer interaction will change. So Nayantara, instead of probably giving her credit card to pay at a terminal, she might just, tap and pay at the terminal, or you might just, scan a QR code at the terminal and pay from your mobile phone.
So I want to talk to you a little bit more about this. From the consumer's perspective, the ordinary person, whether they're going out shopping, whether they're transacting some business deal or whatever, what changes for them if credit cards are linked with UPI? Just that they don't have to carry a wallet anymore.
I think so. I think, it might lead to this innovation of being able to manage all your cards in one place. So this is one experience that you don't have because of the physical form of a card. You may have 3 or 4 different cards and, you're carrying them physically with you. Whereas in UPI, you may have 3 or 4 debit cards, but you can link all of your all of your savings accounts in a single app and be able to manage this in a single place, view all your transactions in the same place, and so on. So I think from a consumer's perspective, it'll be more about convenience and the ability to manage all of your cards in one place. But otherwise, I think another angle to look at this, Nayantara, which I was talking about at the beginning of this conversation, is I think an infrastructure may not change much of our lives, people who already have a credit card. I look at this as an enabling infrastructure for the next 100, 200 million people who don't have credit cards to come into the credit world today through this infrastructure. So I think that target addressable market. So today, we know by estimates that there are almost 30 million unique credit card users in India. I think an interesting question for us to ask is, will this infrastructure, like having credit cards on UPI, increase that credit card user base from 30 million to 300 million in India over the next 5 to 10 years? And that, I think, is more exciting, because a lot of new people who never had access may come onto the system, and maybe our lives may not be 10x, but their lives probably will get 10x because they have access to credit today.
And how do you see that feature being rolled out? We've seen Nandan Nilekani, for example, in 2020 launched that open credit access net protocol. We've been hearing about when credit could be allowed to be built on top of UPI. Can this also maybe be a foundation for buy now, pay later if Apple is doing its own partnering with Goldman Sachs, why not NPCI?
Oh yeah, absolutely. I think a way to think about credit cards on UPI can be as a modern BNPL infrastructure done the India way. It's a public good that's available. And now a lot of people who issue credit, it could be banks, it could be NBFCs, it could be fintech companies, all of them on one side can now innovate and build new credit products and make them available on UPI. And the biggest power of this is that UPI as a network will make all of this merchant network available to these credit issuers, and thereby we will see network effects of people using credit to transact. Now, from an operationalizing perspective, this is not impossible to do, but this is definitely hard. There are two big challenges that I foresee which need to be solved. The first one is, today, merchants who are accepting UPI, people who have UPI QR codes, they have signed up for UPI scheme, which is called as the UPI debit scheme, where the MDR is 0. Now, let's say, Nayantara, you're running a small shop, you're a Kirana shop owner. And if you have a QR code today, when somebody like Nikhil comes and pays, somebody gave you this QR code. So you have agreed terms with that QR code provider saying, hey, I'm going to use your services. The charges for this is going to be 0, etc. Now, tomorrow, if Nikhil wants to come and use the credit card to make a payment to you, you should basically be able to accept it. So in order to do so, Nayantara as the small merchant has to re-enroll for the credit scheme. My sense is that RBI and NPCI, or the banks as part of the steering committee with NPCI, will come up with KYC guidelines, will come up with pricing guidelines for you to be re-enrolling into this UPI credit scheme. So there is an operational challenge of re-enrolling merchants, taking their consent, signing a new agreement, and even probably doing a stringent KYC. That's number one. The second challenge that I see is on the business model of how do we convince merchants to pay an MDR. So it's going to be a chicken and egg issue, because today credit card companies, 50% of their revenues come from MDR, right? So, for credit card companies to be excited and to come on to this UPI on credit card on UPI rails, we have to figure out how are they monetizing this, which means there has to be an MDR regime for this, which has to be brought up. While NPCI and the banks and RBI may come up with the price, what will be interesting to see is how do merchants react to this? Because in merchants' minds, UPI is a free public good replacement of cash. And I think we will have a huge challenge of marketing and educating and creating awareness of merchants to say, hey, if somebody pays from your bank account, it's going to be 0 fees. But if someone pays from their credit card, it's going to be 1%. Now, this will make it harder for the merchant to do reconciliation, to figure out their margins, and so on and so forth. So that behavior on the merchant side is to be seen. So I see these as the two challenges. They're not impossible to be solved, but they are hard problems. So I expect a lot of these clarifications and things to come over the next 3 to 6 months. I think NPCI will deliberate this with their member banks and then come out with procedural guidelines. I think we may probably see this getting operationalized over the next 6 to 12 months from a consumer and a business perspective.
Oh, you think it can take 6 to 12 months for it to be executed and be operationalized?
I think so, because I think, NPCI already has so many things on their plate from UPI's perspective. We have UPI autopay that has just kicked off. We have e-rupee. Like they say, there's never a dull moment in Indian fintech with so many things happening. I think just purely from a prioritization perspective, they will first get done with things that low-hanging fruit and get on to newer initiatives. So I think that much time is required. I would expect it to take so much time.
That's right. No wonder we have the most sophisticated virtual corridors, financial corridors. Thanks a lot, Nikhil, for simplifying all of that for us. We were trying to figure out why it's so important that credit cards linked with UPI, what it can do for the fintech landscape. Thanks once again for joining us today.
Thank you so much.